today is the 4th day of the Chinese New Year, and we are not yet in the rabbit year, mind you, everyone. Okay, so the rabbit will arrive on February 4th. That's the official time of the new solar calendar changing, and this is where the earthly branch will change. The whole pillar of the year pillar, the heavenly stems and earthly branch will change to Koima, the water rabbit year. And this today we are going to talk about is the forecast for February. Okay, so this is the top agenda. Today, as usual, we will have the introduction, disclaimer, a brief recap of last month for January, and then the influence of 5-element energy. This one should be February 2023, and then also February 2023's geopolitical and financial forecast by PC to confirm what is found in the energy pattern of the month. And finally, we will follow by some summary. Okay. A bit of disclaimer here, as usual, that this content is purely based on our study using research and also Chinese astrology to check or to forecast on the global trend. And it's for you to use as a guideline in your investment decision. You can even use it in your work if your work not involves supply chain and all those items that is more related to the global trends that is impacted by the global trend. You should exercise caution in investment, especially in such volatile situation. I already talked about this volatile situation that it will not end. Okay, it will not end even this year. So you do your research, your own research on the company that you want to invest. And finally, because we are not a financial advisor, no stock advice will be given. Okay. So let's recap on the January's energy. So January, we are still in the year pillar of the water tiger and also the month pillar of Kui Chou, means that water ox, there will be a lot of earth in this month pillar. So we have already looked at the hexagram also, which is signified or represented by sunset. There are a report of mixed weather and some parts already reported warmer weather as forecast. And also the sunset here, actually, we are moving towards the sunset of cash as well. If you realize that there are more and more governments are moving towards digital currency. Okay, so the sunset also signifies that the lockdown that China is reopening. Okay, we will look more into China in the feng shui law shu chart later on. Okay, and then there's also sunset of cash society. There's an optimistic outlook rebound in the market, which we have forecast because sunset is beautiful, ma. So it's that there is, you know, I think some index is on the increase, right? By a few percentage, right?
Yes.
Yes.
Yeah. Actually, yeah, for the S&P, it's actually increased, but normally increase not much in terms of percentage, but you will actually see in terms of stocks, they can vary between 10 to 20% increase, yeah, over the last few weeks.
Yes, that's right. And you can see even the chart also shows this as well. And then a dry and warmer weather. I think this is towards end of January that it's goes down again. So
yeah, you are correct. In fact, they are predicting a vortex blast which can bring temperature down towards the later part of January, which could be somewhere between this weekend or next week.
Okay, yeah, at least because the cold element is no longer in the chart. That's why it's better now. And also definitely it will be a warmer weather as we move towards the February month now in 2023. Okay, we are changing. We are actually changing the energy of the year in the February month. Here, we have already talked about the whole year in our astrology talk 2 weeks ago, right? And we will be moving to a Kui Mao year on February 4th, as stated, and with a Jiaying or wood pillar. This is a pure wood pillar. From top to bottom is wood. And we can also see the element here that is fire, which is also warming up the weather. That's why I think towards of January, the chi already starts to set in. We can see some fire, so there will be generally a warmer weather as a whole. Okay, so generally means that maybe about more than 50% or about 80% of the places will experience a warmer weather. Of course, there will be some exception. In Chinese metaphysics, we have the dot of, the white will always have a black dot. The black part will always have a white dot. So there's some exception. And in Western philosophy, we have learned about Pareto. So there's always an 80-20 rules, okay? It's not absolute of 100%. Okay? So I can tell you that in the February energy, which also governs the whole year, which I've talked about in details, that's why I will not go into this today. I can tell you that in terms of the energy, you can see that because there's a lot of wood. Wood is grow, right? It's a growth, right? Because it grow everywhere. It can, stretch out everywhere. So everybody, the sentiments will be, they are anxious of growth. Okay, everyone wants to grow. There will be a lot of people like learning, keeps want to grow, keeps improving, but not sure that they are in the right direction or not. Okay, beware of also falling into the traps of learning. Okay, I will maybe put in more of this in my Telegram channel later on. Okay, Evelyn at Life Energy. So about this learning thing. And also people definitely, because of there's a lot of fire and a lot of wood, so people want everything to be very fast. So you can see very fast moving, and the sentiment is also fear in the market, a lot of fear also. Yes, this wood here represents our liver. Actually, liver an organ in the body, and that represents a liver, which also relate to the feeling of general population in the world, which is more anxious, the fear factor, and people can get a bit more angry easily this year. This is what it means. And grow also means okay, somebody tell me grow is very good. Can you tell me that is it really that good? We have a lot of participants today, right? So can give me some interaction here that, do you think that it's good? Can you put in the chat box that, do you think that we have a lot of this grow, wood, and also fire is also wealth energy, as I said. Do you think it's a good thing? Anyone? Yeah, there will be also competition in certain parts. It's no good. And also the grow here means that everything will also grow in price tag, means that inflation. Yeah, that's right. Exactly. Everything also grow in price tag, and the money supply also grow, right? Not as PC has already stated, inflation means that it is an expansion of the money supply.
Okay. Yeah, so, I think a lot of sorry, Evelyn. I think a lot of people has the misconception that price is actually inflation, but in the truer sense, inflation actually means the expansion of money supply, and price is a laggard that comes after the expansion of the money supply. And that's why the expansion of money supply will continue, even though the Fed say is going to hike interest rate, pulling liquidity from the market. But the US now has reached a debt ceiling. So the US obviously is not going to default. So what it will do, it will expand the debt limit again. And that debt limit will be another few $1 trillion. And that few $1 trillion have to be printed to pay for interest on debt to keep on funding the government, the military, Social Security, Medicaid. And there are so many things that the US is involved in that is outside its border. So the funding actually increase proportionately. So that's why expansion of money supply will continue.
Yeah, that's right. Yeah, and also, yes, Augustine is right. We talk about that the day master is too weak. That means every human being in this earth is weak, cannot control the wealth. That means we will be very tired working, in other words. Okay, so tired of generating more wealth, and also the wealth become too much. It's not balanced. Okay, so and also with so much wood, also government are also creative in ensuring growth. Okay, that's money supply growth lah. Just like I said. Okay, and maybe ensuring growth, looks like the mirage of looking like they are growing in the economy as well. Okay, but actually their debts, in actual fact, their debt is also growing. Okay, so and one thing I would like to go through is that the pictorial form of this chart. You can see a lot of trees, wood, and also a lot of fire, right? That means it will be a dry season, as we talk about, and it's expected that forest fire will be the main headlines here instead of floods. Last year, we can see fires. Yes, fire with water, right? Last year's chart was a lot of water with fire, so we see flash flood as a headline. So this year, it will be more of it could be forest fire. Roughly, when will it take place? This is more like, unpredicted disaster. To me, maybe it's around May time frame, because that time I think the chart will be very hot that time. Okay.
Yeah, it is also just before summer. Yeah.
Okay. Yeah. So the month February hexagram is accomplished. Okay, or completed, the wisdom from the hexagram itself. So completed means that this is a water image. You can see here the two broken lines, one like looks at bridge, and then this is like no water. It's a bridge over water, but it's over troubled waters. I don't know whether
Simon and Garfunkel.
Yes, that's right. Bridge over troubled water. Okay, so this is the water here, and then this is actually the fire, the Li Gua, or the period 9 Gua here. It's also telling us that February was setting into more towards the period 9 already, because this Gua or this trigram also appear here. So it is like accomplished means that people will think it's very good, right? It's not, because everything is in a cycle. So after accomplished, we have not accomplished. That means that what we have done with, that means what period 8, we have already done with the period 8. We have accomplished period 8. This is how I interpret the hexagram. And boiling water also is like, it means that fire and water has to be balanced. If fire too great, the water will dry up. Water too much, the fire will extinguish. Okay, so we need to be cautious. The hexagram also tells you, the word of the wisdom also tells you that you have to be cautious with the danger ahead, and you need to arm yourself in advance, as well as complication will also rise. Okay, it will become accomplished. This is hexagram number 63. We have 64 hexagram. 64 is really not accomplished. That means it's a cycle where we are slowly moving into a new cycle or a new period. That is what it means. Okay, so the market, everything will reset itself. This is how I see it. Okay, so we shall check what PC, based on his global trend, will look at it in this way. And this somebody I think Richard, right, has sort of, asked me, request whether we can put some flying star perspective. So I've done some research, and the other time I also say that because we are also not sure that exactly the flying star, how they started the center, because I think the Lokyang, the old Chinese capital could be around here. It could be slightly shifted. So sometimes the border might not be exactly what I say here, but it's more or less in that region. Okay, so this one is that flying star means that it's is related to the stars in the sky. It's related to the Big Dipper. They have 7 stars, but they have 2 in the 2 at the side. The Big Dipper. I don't know whether anyone of y'all knows about this Big Dipper star. So all these stars numbers are actually correlate to the Big Dipper's star number 1, 2, 3, 4, 5. This is how they derive to it, and the position of each year, it will be different. Okay, they have their home base, but last year it was in their home base, so this year is shifted again. And the most important thing here, normally we look at flying star, we look at star number 5, which is the brightest stars. That means it has the biggest impact. Unfortunately, America is having star number 5. It's the emperor star, and it's the most dangerous star. Okay, so it is it means that there could be calamity, or there could be potential disaster or danger is awaiting in the northwest region of this part of the world. Okay, I think this correlates to what the trends we are seeing as well. Okay, that we are this one. And then star number 9, people stated that it's a good star, right? If you know feng shui, I think most of our friends that tune in today here, some of the members knows a little bit of feng shui. Star number 9 is supposed to be considered as a good star, right? In Europe, that means will Europe grow or not? Unfortunately, this is not the case. There's a lot of misconception. Star number 9 is actually a fire energy. Fire energy, that means it will multiply very fast. Whatever good or bad, it will multiply. So if Europe is not doing that well as a whole, that means the multiplication effect will be even more.
Yeah, okay. Afterwards, I have some interesting charts to show you about Europe's economy status. I think they are all together about 8 charts. Then you will actually have a grasp of which direction the European economy is heading towards to.
Yes, that's right. That's right. So this is basically multiplication. If a good thing, then it will multiply more. But if it's a bad thing, then it will this one. So, and also star number 7 is actually in China side, because Beijing is here. So this is also part of China. So we look at where the capital city is. This is the head of the this one. So it's aggression. That's why we say that this Chinese government, I think they do have a wisdom of Chinese metaphysics. They know that they are now in star number 7, means that aggression. That's why they already opened up their border. And this year, I would think that China will be quite aggressive in all areas. Okay, so in all areas, it's trying to put up or speed up maybe their R&D in the chips, okay, or in their economy, or in opening up the border. So they will be looks like they will be quite aggressive this year. So generally,
I think Evelyn, I think you are quite right on that. Later on, there's one topic on China that you will also correspond to what you mentioned just now.
Okay, yeah, okay. So this is generally the 3 stars that we will need to look at, because we are looking at the world, one of the world biggest economy, US, and also China. So this is where we look at it as a whole. Okay. So okay, I think generally that's all for my part. A little bit of knowledge sharing. I try a little bit of period 9 thing. So okay. So period 9 is actually also about, self-learning. And there is a lot of things that you can self-learn. and we have to learn how to overcome like challenges on our own also. Okay, so there will be a lot of things on period 9. You can refer to my YouTube channel. That's why we have to learn how to navigate the computer. The most basic thing, we have at least learned how to navigate the computer, the screen, every menu that we need to learn how to do this already. Okay, to equip ourselves to period 9. Okay, so I think this is my sharing for today. Over to you, BC. I think you want to share your screen, right?
Yes.
Yeah.
Okay, hold on, let me share. Okay. So I make some changes, last minute changes. So
later
that
we merge together to give our members the latest. Okay.
Yeah. So well, let's go back to January. What actually happened? We were talking that Russia could mount a winter campaign, but also qualify our statement that all the rules about sending troops and heavy armaments to Belarus could be a strategic move to draw away Ukraine troops from the Donbas area, and that latter turned out to be true. So what happened was Russia moved a lot of troops and armaments into Belarus, and Kiev was worried that they might want to attack from Belarus. So it pulled in quite a lot of reinforcement to reinforce around Kiev because that's the capital. So apparently what Russia did was they attacked Bakhmut and several other villages and townships nearby, and they have secured quite a large area. So it was a strategic move after all. So US did not announce any countermeasures against Saudi Arabia after the latter said that it's open to trade oil in renminbi. So we were expecting that US would at least come up with some rhetoric, but US has stayed pretty silent about it. So that's unbecoming of the US. Yeah, normally they will actually retaliate very fast. But I think they are also worried because of one thing, that's the oil price. If they antagonize Saudi Arabia even a fraction more, I think they are worried that Saudi Arabia would actually say we are going to cut production, and that would actually push oil price much higher. Now, bear in mind that the US strategic reserve, where its oil inventories has fallen to about 36%. That was last month, if I'm not wrong. So inevitably, the US will have to refill that inventory. So when it does so, then it will be competing with other countries to buy oil, and that will push the price of oil higher. And the US actually have set, that their target price to buy oil is actually at $70 US. But oil right now is already trading at US $80 per barrel. So unlikely they are able to purchase it. So that's why they are even more worried. If let's say they antagonize Saudi Arabia, then it went up even higher. And then they will not be able to meet their budget guideline for the refilling. But I don't think it will fall back to 70 because China has just reopened. And for the members, I think I posted it on the Telegram chat that one analyst is predicting that China reopening will actually add 1 to 2 million barrels of oil into the demand, into the market, for demand of oil, and the refilling itself would actually create another demand for 1 million. But right now, there's no additional capacity. As I mentioned in most of our talk shows, the Middle East or OPEC countries are unwilling to raise production because they know that the cost of bringing oil to the surface is getting more and more expensive because an oil exploration has fallen behind the production. So they would want to protect their margin for as long as possible because
okay. Yeah.
you have anything to add?
Yeah, I have something to add about the oil. So the oil is the case also where actually just now we said everything is growing. So the demand is also growing. That means the demand will grow beyond the supply. That is also the meaning of it.
Yeah. So actually the whole issue is that once China reopens, US start refilling, you know, there's every likelihood that oil could actually move up much higher. And for the greater part, you know, like the US, they say that, hey, you know, our CPI, the consumer price index fell 0.1% month on month in December. So the market is already cheering, which means inflation has already peaked. Right now it's disinflation, but no one actually think about how oil will actually play a role, except for a handful of analysts out there, you know. So all these analysts are predicting that China reopening will actually boost up consumption, okay? And we are not even talking about refueling. And there's also a wild card that Russia could cut production, okay, just to spite the West, okay, because Russia is already exporting oil to India, to China, and even to Saudi Arabia. You know, Saudi Arabia is actually, there were news that Saudi Arabia was actually buying Russian oil at a discount and then selling its oil at a premium to Europe. So that is why that $60 price cap in oil is not going to work, because there's many ways about it, okay? So another thing is that we predicted that Japan would actually continue to dump US treasuries, but they did not. Rather, they increased US treasury holdings from 1.07 trillion, okay, to 1.8 trillion. So we actually predicted that they will be pressured to defend the yen by selling US treasuries. So probably, I think everyone has been dumping US treasury, and China has dumped the most. In fact, China's holding of US treasury has fallen from more than 1.2 trillion to right now 870 billion. So I think the US could be pressuring its allies, okay, to actually absorb some of the treasury. And that could be one of the things, okay, because they need to support each other. And I think later I'll touch on Japan, which is also another nightmare in the making, okay. So where we got right, well, US housing continued to worsen. In fact, many months ago, we have already talked about US housing, and indeed it has worsened. Existing home sales plunged 34% year on year. And then we were also correct, because we said that the softening of CPI could give the reason for US market to rally, and the S&P is up 5% year to date. There were also more signs of potential recession, okay, as the PMI for manufacturing and non-manufacturing fell into contraction. So the PMI is actually a lead indicator. This is actually the Purchasers Managers Index, which measure the sentiment of the purchasing managers, okay, because they are the one that works in multiple industries. So it has fallen into contraction, and being a lead indicator, it would only let you know that things are going to be back from here. Yeah, so again, we say that the reopening of China could actually boost economic activities and help the market overall. So China is gradually recovering, and the Hang Seng Index, in anticipation of that, actually rose 9.43% year on year. Year to date. So oil has also started to trend up as China reopens. If you look at it, before China's announcement of opening, oil was hovering around the $70 to $80. So right now it's already past 80. And China continues to dump US treasuries. This part we got through, we got it right. So from 910 billion to, this is 870 billion. To 870 billion. So what are the economic and financial implications. So let's look at what the US data actually tells us about. So obviously there are more signs of recession in the US. PMI manufacturing and services in December at 46.2 and 44.7 respectively. Now, any reading below 50 indicates contraction. So retail sales tumbled 1.1% month on month in December after falling 1% month on month in November. Now, where the US is concerned, almost 70% of its economy, of its GDP, is reliant on consumers' spending. So if retail sales has tumbled in November and December, I don't think Q4 would be any good either. Now, bear in mind that 1.1% fall in the retail sales is actually nominal value. We are not even talking about real value, because real value is often after the subtraction of the CPI, okay, of the inflation rate. So that means that real retail sales has actually fallen much deeper. So industrial production fell 0.7% month on month in December after November's 0.6% decline. And US housing continues to weaken. Pending home sales plunged 38.6% year on year in December. Existing home sales dropped 34% year on year in December. The National Association of Home Builders Index came in at 35 in January, better than the 31 print in December. But I think this is actually a measurement of the home builders' sentiment. And I think the sentiment improved slightly due to a falling CPI in December. So US housing starts fell 1.4% month on month in December, while building permits fell 1.6% month on month. So all this negative data will be a primary concern for the Biden admin. So just now, Evelyn mentioned that there's concern, there's angst with regards to the economy, inflation. So we see how all this will play out eventually. So the US reached its debt ceiling on 19 January. The Treasury Department can implement extraordinary measures to prolong the situation until June. That means that they have to close a lot of the other agency services, okay, from other areas, and that includes the parks and all those. Failure to raise the debt ceiling could potentially result in the US government defaulting on its debt. This will not happen because the US will never allow it. So of course, there's going to be a lot of bickering between the Democrats and the Republicans, in a game of brinkmanship. Then up to the 11th hour, then they will say, okay, let's work out a deal. And they will actually have a deal. But raising the debt ceiling means that the US journey towards its debt inflation has not ended, okay? Probably it will increase by another few $1 trillion. And that few $1 trillion will be reached very, very quickly. Because the current situation of the US economy is that with the stock market having fallen substantially, and a lot of companies are now seeing a recession in earnings, and forward-looking statements from companies have indicated that they are not going to see a strong recovery in earnings either. What does this mean? Now, it means that the capital gains from the capital gains tax from the stock market has fallen. And if, let's say, companies' earnings have also fallen, the tax on earnings have fallen. And if companies start laying off people because of because they are worried about the economy, that means that personal income tax will also have to fall. Now, when all these three have fallen, where the tax revenue is concerned, what is actually increasing? Because of its tremendous debt, because interest rate has increased, the US have to pay a much higher interest payment on debt. So that is going to grow. So what happened will then be, they have to borrow even more money, okay? And another thing is that the Social Security will actually this year start paying 8% higher in terms of distribution to the people under the Social Security for adjusted inflation. So that means Social Security is going to take an increment in payment as well. So all this doesn't bode well, okay? And that is why whatever ceiling that they have adopted, I think it will be breached much quicker than previously, because for a greater more than a decade, the Federal Reserve had kept interest rate very low. Right now, interest rate is escalating higher. So raising the debt limit, of course, is equivalent to an expansion in money supply, which is inflationary. Now, the only way to fight inflation is to hike interest rate and cut government spending. But the US can never cut its spending because of its ever-growing debt and its need to finance the military, okay, which is actually, about $858 billion a year, okay? So that's a huge amount. So I think in this regard, okay, gold and silver should perform well. So let's look at what's happening now. There's more gold actually leaving the COMEX right now. Now, gold stock is down 41.3% as at 20 January compared to 40.1% in 29 December. So total decrease of 1.2% over 3 weeks. And now the COMEX is a place where gold price is being manipulated in the precious metals market, okay? And for those who say that there's no such thing as manipulation, well, I'd like to draw your attention to the fact that JP Morgan and several banks, traders have been convicted for spoofing precious metal prices, and JP Morgan 2 years ago have to pay a fine of 980 million, I think, for its involvement in manipulating the prices of precious metal. So that is still being continued today. But then what is causing the vast drain of gold from the COMEX is because central banks have been the biggest buyers, especially central banks from the East, okay? And this is an indication that there is a lot of hedging going on. And on top of that, there's a lot of talk about the BRICS reserve currency, which will be backed by gold, oil, and gas. Okay, so that's why there's a lot of drain from the vaults in the COMEX, not only from the COMEX, but from the LBMA vaults as well. And then silver continued to leave the COMEX as well. Silver stock is down 26.2% as at 20 January, compared to 24.9% at 29 December. So total decrease of 1.3% over 3 weeks. And silver is the most manipulated metal in the world, because only silver has not reached its 1980 record high. The rest of the metals, the rest of the commodities have actually breached that level except silver. So silver is often spoken of as the Achilles heel of the bullion banks, which actually control the price. So, and why is it manipulated? Well, in my own opinion, I think because every electronic gadget in the world have some silver in it, okay? And these electronic gadgets are often disposed of, and the silver is hardly recycled. So in order to that is why there's a need to manipulate the price of silver down, so that silver would not actually rise up in price. That will cause a lot of electronics gadgets price to increase as well, the cost of manufacturing to increase as well.
Yeah, silver is also a raw material for solar panel.
Yeah, and that is why silver, the evolution of solar panels have been to an extent that, although the amount of silver in the solar panel has been reduced because of improved efficiency, but right now the new high-tech solar panels actually have dual side. So the amount of silver demanded is actually much higher because previously it's just on the single side. They've reduced the amount of silver on the single side, but right now, the new solar panels actually can be rotated, can be adjusted to follow the sun direction. Okay, and why is it, on both sides? Because in some areas, like in the desert area, the ground itself will reflect back the light. So that is why there's a dual layer where the solar panel is concerned to actually improve the efficiency of harvesting energy from the sun. So yeah, so that is why right now the demand from silver is actually escalating, and it worries the bullion banks even more because they have been heavy on the short side. So that's why you see, some price manipulation this week.
And also this year actually, the chart, although there is metal that is buried in the snake there, the energy chart, but the sin metal, which is related to the precious metal, is not there. That means precious metal is going to be a scarcity this year.
Yeah, and you can see, all their works are actually turning negative, and that means that that there's some question that if let's say metal is not on the yearly chart, then does it mean that metals would actually underperform? Well, I think for one thing that we know for sure at the beginning of this year, there is shortage of metal. We actually reflect that is not in the yearly chart because that shortage of metals in the world. So what happens when there's shortage in the world? Okay, people will bid for the metal even higher because there's a desperate need to get the materials for manufacturing, even in a recession. So during the 1970s, we have a period of stagflation, okay, where there's low economic growth or negative economic growth, but high inflation. So what happened during that period is that the price of commodities actually went up. Well, if let's say there's slow growth, recession and such, why does it go? Well, because number one, okay, there's instability in the fiat currencies. Okay, that's one of the reasons. Now, the other reason is that because the economy is so bad, people just do not know where to park their money. So they park their money in commodities, which is a reflection of real assets. Okay, so during period of high inflation and high interest rate, real estate won't perform well either, because if you buy the real estate, you have to pay a very high mortgage loan. So that's why people did not invest. It becomes a liability. Yes. It becomes a liability in a period of high inflation. So people went into something which they can hedge, something which they can know for real, is by owning commodities. And
okay. Okay, so one more point to add, which BC reminds me also. When we look at this year's chart, we also see that because water, then we need metal to create water. So the metal part, the ting or the metal is actually represents supply. That means supply has shrunk, but the demand has increased, and the demand continue to increase, continue to expand. So this is where the price also will go up. Everything, will go up in a not a very logical manner. So, it's up to people to put a price tag there in illogically, the growth of the price tag.
Yeah, and I think you have to adopt a very different perspective view when it comes to precious metals. Precious metals have been money for almost 5,000 years. Okay, right now, what we call money is not real money. Okay, it is actually currency. A currency is a credit note. Okay, so it is a liability to the central bank. Okay, where the money is where the fiat currency is concerned. So real money during ancient time is actually gold and silver. And if you want, you should not look at gold and silver as just on the perspective of metal, but more on the perspective of real money. So when just now, Evelyn mentioned that it's like a sunset of cash, okay, because there's a shift towards digital currency. And not only that, there's also a shift into precious metals like gold and silver. For example, India import the most silver in its history last year. China and Russia has been accumulating gold. And recently, Russia announced that it will actually, its sovereign fund will actually double its investment in renminbi assets to 60% and double its holding in gold to 40%. So that means there's a lot of wealth fund, they are moving into precious metals as well. And just this morning, the Swiss National Wealth Fund, actually, they will actually move 1% of their asset into gold. And that 1% may look very little, but then it's actually 430 million US dollars. So all these changes are being formed, and it often ties back to gold. For example, Sberbank in Russia has tokenized gold, which means it has a token that is backed by gold, and token is a digital asset. Iran and Russia are exploring creating a stable coin that is backed by gold. And Ghana recently said it has purchased oil using gold. Zimbabwe has started using gold as a medium of exchange and to have gold as a stability, as a point of stability, as an anchor of stability to its inflation. Okay, so Zimbabwe is actually issuing gold coins. And what did the IMF say? IMF told Zimbabwe to stop issuing the coins and use financial instruments instead. So don't use gold coin to help stabilize your inflation. Use investment securities by charging a high interest rate, okay, so that it creates even worse inflation for your country. Okay, that's how double standard the IMF is. Okay, but then US inflation is so high, UK, Europe inflation is so high, the IMF never tell them to double their interest rate because all of them are heavily indebted. So the IMF actually have a playbook here where to fight inflation, you need to raise your interest rate 1% above the CPI and reduce government spending. But the Western nations that control the IMF are not doing as the playbook says, but they can force countries that are in destitute, like Greece, like Argentina, like Zimbabwe, like Venezuela, hey, use our playbook. Okay, so that's how double standard it is. And that is also the reason why, as early as 2010, before the start of the BRICS nation, they actually wanted the IMF to relook at the voting rights in the IMF because they comes from a bigger population and growing economy. But the IMF rejected that. That is why we have the BRICS Bank, which eventually became the New Development Bank. And also we have the AIIB, okay? The Asia Infrastructure Investment Asia Infrastructure Investment Bank. So that's when they decide to do their own, and that's why right now we see a BRICS reserve currency being planned. Okay, because the Western debt-based system has no longer been reliable because they are not following the rule book themselves. Okay, so let's talk about Europe. There's going to be mass protests, demonstration, and strikes, okay, that will continue to plague Europe and the UK. So here, just recently, 1 million protests against Macron's pension reform. Then UK, United Kingdom at a standstill as simultaneous strikes stall the country. So this will impact the business community and overall productivity. That means that there's only one way that Europe is going, and that is down. Okay, let's look at the Europe. You look at the EU retail sales year on year, you see that, you know, most of it over the last 6 months have been in negative territory. The UK is even worse. You know, it's negative territory for 9 months. Okay, so this means that, you know, the economy is actually crumbling from within. Then look at the industrial production. Now, Europe have already started on a downward trend, and this is October, November. Now in December, a lot of things happen here, and it's going to happen very fast in the coming months. The anchor of EU industrial production is actually Germany. And what happened in December is that news came out that BASF, a huge petrochemical plant in Germany, BMW, Mercedes-Benz, and Volkswagen are shuttering their German production and moving to China. Why? Because of energy, the cost of energy. Now, also in the month of December, a lot of the smelters, those factories that melt metals, okay, so that we have the ore that is available to be fabricated into raw materials for the industry. Now, a lot of smelters also closed during the period of November and December because of high energy costs. So that means that industrial production for December is going to go down. And you look at the UK industrial production,
This also correlate when the smelters goes down. Actually, it's correlate with the chart also that the metal is weak. That's why it will impact all the smelters, those that
yes,
metal related industries.
Yes, and also in the supply chain. You look at the automobile, you look at the anything that has anything to do with metals. Suddenly, everyone will be bidding the price for metals because they need it. So if you look at it, UK industrial production, is continue to go, is in negative territory for 12 months here. So, and UK decide to disengage from China, where it doesn't have any trade partner, perhaps maybe with the with US, because it has already rid itself from the EU, and it has shuttered so many Chinese investment in UK, and still they want to continue to disengage with China. And you see their production, when a country has lost its industrial production capacity, its economy is going to be in the doldrums, because only when a country has industrial production capacity can it create new products. Okay, it can create new opportunities. So when industrial production keeps on going negative, that means the country will be very, very difficult to climb up from its death. And right now, there are so many strikes in the UK that will actually push the economy into a brink. Then let's look at the sentiment issue. EU business confidence has been declining has been in negative for 4 months, but has started the decline, in February, where it peaked and then it started to decline. Right now it's negative for 4 months. UK, they don't measure month on month, but they measure quarterly. But you see over the last 4 quarters, it's already in negative UK business confidence. And we look at the PMI now, 50 and above is expansion, 50 and below is contraction. And if you look at it, the EU composite PMI has been in contraction for 1, 2, 3, 4, 5, 6 months. Okay, then the UK, 1, 2, 3, 4, 5 months. So these are all lead indicators. When the lead indicators are showing contraction, that means things are only going to get worse. And without the industrial production capacity, where industrial production has turned negative, it's going to be a struggle getting the economy up. So that's how Europe is. Okay, when we want to look at the, just now we talked about it being on the, in the northern side. So it's just going to get worse, okay, because there are strikes, protests, followed by poor economic indicators. So let's look at China. Now, foreign direct investment, FDI, in the Chinese mainland in actual use, okay, gained 6.3% year-on-year to 1.23 trillion. In USD terms, the FDI inflow went up 8% year-on-year to 189 billion. So despite what, a lot of YouTubers who are paid to talk negative about China, China has not collapsed, but China is drawing FDI. Okay. Now, for those who are unaware, the US, the US have a 300 million budget. Okay. to propaganda budget to demonize China. Okay, so anyone who can post bad things about China, they will actually get paid. Okay, so China's GDP grew 3% year on year to a record high of 121 trillion renminbi, or US 18 trillion in 2022. Now you can see that the gap between the US and China is actually narrowing very fast here. Many years ago, it was 10 trillion, and right now US is about 24 trillion, so it's just 6 trillion. 2 years ago, the gap was actually 8 trillion. So the gap is actually narrowing, and that is why the US is working very hard, okay, to contain China. So also, I would like to share, when we talk about all this, our YouTube actually got censored. Okay, not censored in a way, but our views is being reduced. Okay, so that's free speech, and where the US is concerned. If you talk bad about other countries, it's okay, but if you talk bad about the US, it's not okay. So that is why it's very important that once you see our YouTube, okay, whether you don't sit through the whole program or not, just like or share it, okay, to help us maintain the view, so that more and more people will know what is going on. Otherwise, we will get censored by YouTube. Okay, for example, one of my views was more than 100, then it suddenly dropped to 80. Okay, so because I monitor my views almost every day, so that's why, go to Evelyn channel, go to my channel, just like and share, okay, to help us maintain our viewership, because otherwise we won't move up the algorithm with all this censorship. Okay, so continue with China. So let's look at China's industrial output, which went up 3.6% year on year, and fixed asset investment rose 5.1% year on year. But investment in property development fell 10% year on year, dragging down the growth of both overall fixed asset investment and investment from the private sector. Now, this 5.1% is driven by investment into high-tech industry premises, investment in infrastructure, but private housing actually fell 10%. So that means that the worst of China housing is actually in 2021. So 2022 is sort of moderate, but coming into 2023, there's a lot of plans right now to revamp China real estate. Okay, they are forming trying to form REITs, which are actually like currently they are renting out, their apartments that are fully for rental. They are trying to urge them to convert into REIT to get new financing to actually build more rental units, okay, to spur up the development of the property sector. Then, of course, they are encouraging parents to have more children. When you have more children, you can actually buy more property, okay? And they are actually encouraging Hong Kong developers to go into China, getting the credit or loan from the state to complete projects or to develop new projects. So I think the Hong Kong developers are very efficient, and mainland China developers have been over leveraged because suddenly they want to dabble on every type of business. Okay, imagine Evergrande, okay, which actually went into near collapse, but it's still surviving today. They, from property, they wanted to start electric vehicle. Okay, so that's how crazy it has been. But right now, I think China has been very strict. Okay, it's now very strict on credit where property is concerned. So I think they won't allow developers to go beyond, what their core business is. They should specialize in what they are good at rather than going into every area.
It's like here, our property developer, there's one start with M1 also, want to dabble into healthcare and see what happens.
I want to challenge Top Glove.
That's one. I start with M1. I wouldn't mention the name here, like y'all know.
And also, and then after they started, Glove drop.
The whole thing drops. So actually China, it looks like China is also on a very aggressive path. And I can say that in terms of China property also, the government, I think they will control the price of the property, make sure that it's on a gradual growth. this is what I look at it. And I've done some research also related to period 9, because later on we will, have some books about period 9 as well. It seems that also China also is already preparing for period 9 through, their policies.
Yeah. So of course, retail sales contracted 0.2% year on year. That's because of the a lot of the COVID lockdowns. And I think why the reopening was that I think that the Chinese government were also worried about the direction of their economy, because they cannot continue, okay, to have lockdown while still experiencing, deteriorating growth. So I think that's one of the reasons why they reopened. But before that, they have to ensure that most of the people in the country would be safe. So that was why in December there was so many mass testing. Okay, but the people started to revolt as well. For example, in other YouTube, you see China that they don't have freedom of expression, they can't protest. Actually, China actually has, those people have been in China, they say throughout the country of 1.4 billion, every day there's some protest somewhere, okay? And it could be small, it could be big, so it doesn't, it is always there, that the people will protest, because the government listens to the people, and that's why the people, when they are unhappy, they will protest, okay? So unless it's related to national security issues, okay, and that the government won't compromise. So a total of 12.06 million urban jobs were created in 2022, exceeding the annual target of 11 million. The Chinese people became more affluent in 2022, per capita disposable income increasing to 36,000, up 5% year on year in nominal terms. Now, this 5.5% in nominal terms looks okay, even though you may see it as low, because the inflation is only 2%, okay? In US, the wage growth is about 4.25%, if I'm not wrong, or 4.5%. But inflation is actually, even the latest one is 6.5%. So in the US, the household have been experiencing negative real wages for 21 months consecutively. So that means that the US consumer won't have money to spend anymore, because number one, inflation is causing the price of goods higher. Number two, high interest rate is causing the payment of housing loan much higher. And because of their shortfall in negative real wages, they are relying on credit, credit card debt to continue their livelihood. And credit card debt just hit a new record high, okay? Household debt just reached a new record high. So this they have to pay with ever increasing interest rate again. So that is why we will see that US consumption will continue to fall, whereas in China, as long as real wages is in positive territory, there will be continued consumption, okay? So that is the difference. Now, what is going to happen over the coming month or months? Now, China is targeting 5 to 6% GDP growth in 2023. Electricity consumption in China is expected to rise 6% in 2023. Now, this would bode well for the Chinese energy sector, and especially in the renewable, in the
lithium battery.
Yeah, China production of batteries actually increased as well.
Yeah.
Okay.
This is also, I think, German vehicle makers also shifted to China, because they know that, this is the main ingredients for their car assembly. Yes. So this will bode well even for uranium, okay? And because China is targeting to build 150 nuclear power plants over the next 15 years, okay? Now, China will also increase its robot density. Now, just now, Evelyn mentioned about aggressiveness in technology and all those. So this is what China is going to do, okay?
It's going to increase its robot density, and this could be a growing trend and bode well for the tech sector. So, and you know, today I saw a report about 5 nanometer chip. I think TSMC says that they see that the sales of the 5 nanometer actually start to fall because there's no great demand. Okay, a lot of the technology that powers the electronics, power the industrial sector. Okay, IoT. Okay, and AIoT. Okay, China actually have something that called AIoT, or artificial intelligence. What they call the term T. Artificial intelligence of things. Okay, so
internet. I think internet. This sort of things, right?
Yeah. Okay. Yeah. So IoT is Internet of Things, but AIoT is artificial intelligence of things.
Okay.
So they actually can move on current size chip. Okay, only in those very, very small gadget that you require the high those small nanometer with high capacity, high processing capacity, okay, to be included inside. But where a lot of the industrial sector is concerned, 14 to 28 nanometer will just be easily done. Okay, so another thing, you know, China's 40-day Spring Festival travel rush is expected to see 2.09 billion passenger trips made this year, up 99.5% from 2022. So February, we are going to see a lot of sector in China will start to grow very well. Okay, the travel rush usually leads to a consumption boom in many sectors, including tourism, dining, retailing, and other leisure activities. Now, this drive in consumption could drive Q1 GDP higher. Yeah, so I think where our members are concerned, we actually share with them some of the sector that they will be that should benefit from this kind of opening up. So this will eventually lead to higher energy costs, and we can expect the price of oil to rise as it is the center of all economic activities. So I think many of you have seen this chart, whether on my Facebook, in the members area, even on LinkedIn. So now, according to John Polomis, China's reopening will boost demand by 1 to 2 million barrels of oil per day. Refilling of the strategic petroleum reserve will create demand for another 1 million barrels of oil per day. And the wild card is a possible Russian oil production cut. Okay, as can be seen from the chart. Okay, now this is in 2021. Okay, where inflation suddenly start to spike. So it has been in tandem with the rise in oil price. But when oil price fall, you can see that inflation starts to fall. Okay, now the thing to look out for is if John Polomi is right, and I'm pretty sure he will be right, okay, when US start to refill, just as China opening start to gather momentum, it will create a competition for the oil in the market. Unless US decided to say that, hey, it's too expensive, we will not actually start our refilling soon. We wait until oil price crashes. Well, that's going to be a very long wait because I don't think it will happen. Even if when recession strikes, okay, most likely OPEC then will say due to weak economic indicators and the recession, we are going to cut our production because the OPEC wants to maintain their margin right now, especially, okay, if the EROI or the energy return on investment, you know, is scaling up a cliff. Now, EROI means that adjusted for inflation dollars, a century ago, it can produce 100 barrels of oil. But in the current adjusted inflation, it can only produce 11 barrels of oil. That means that it's scaling up a mountain. And that means the energy return on the investment is getting smaller. So this is actually a theory from Steve San Angelo. You can actually go to his Twitter. He writes very, very interesting article. So this EROI is going to cause OPEC to maintain their margin because they also know that their reserves are depleting and they are going to move to a new economy, okay, where Saudi Arabia is concerned, UAE is concerned, okay, Qatar is concerned. They want to move to a new economy. But if they follow the whims and fancy of the demand, okay, they are not going to make it. So that's why they will actually protect their margin. And that's why I think there's only one way to go because of the falling EROI. The price of oil is just going to go up much higher. Now, for those who want to listen more about this EROI, you can go to my YouTube channel. There's one section where I actually have with Casey Lau, IFS global trends that will lead the world economy in 2023. Watch that video. I have it is in greater detail where I explain about oil. Okay, using what Steve Sanangelo say in his analysis. So now Japan. Now Japan is going to be what people will call the first domino that will create the earthquake in the financial system. So Japan is setting itself up for a higher inflation because the BOJ does just double down on its yield curve control. So what does yield curve control means? More money printing, okay? And the more money printing, the more they need to have yield curve control. But look at Japanese inflation rate. 4% may look little, but you can see that it has been in deflation for very long. You see, this is the zero bar, okay? It's been in deflation here, and suddenly from negative 1%, okay, to 4%, that's 5% inflation already. So what will happen is that the more Japan wants to exercise yield curve control, the more it needs to print to buy up the bonds. And one analyst actually put it that within 12 months, if the BOJ continues on this trend, it will have bought all existing bonds being issued in Japan. So that means that Japan inflation will only go up. The BOJ tried to raise the yield curve control from 25 basis point to 50 basis point. And immediately, Japan found itself in trouble because they need to borrow money even to pay interest. Okay. So that's why if the only way to do that is just print and buy, and the more the monetary expansion increases, the greater the problem will exist. Okay, for those who have not watched our video in January, even though January is at end, go and watch it because there's a lot of interesting data there. Okay, one of the data that I shared is from CEIC, which puts Japan total debt to GDP at 1,600%. Okay, so can you imagine how can they ever pay? And that means that they will just continue to print. Okay, and Japan, if they continue in this trajectory, they will go into hyperinflation and then the collapse of the economy. So global geopolitics. Now, US and Germany has been bickering over the supply of tanks to Ukraine, and just recently, both Germany and US finally agreed to send their tanks. Okay, because between Germany and US, Germany says we are not going to send our Leopard until you send your Abrams, and then US say our Abrams are too heavy; they cannot work on Ukraine's infrastructure. Then Germany say no, we are not going to send ours. So it's like, eventually, US agreed to send the Abrams, and then Germany said they'll send their Leopard tanks. Okay, so, but I think it's not going to change much. Okay, China recently conducted naval exercise near Guam, raising Washington's ire. Okay, so China actually conduct freedom of navigation, not too far away from Guam. Okay, and then Washington is not too happy. So getting a taste of the medicine, I presume. So both Saudi Arabia and UAE announced at Davos, okay, World Economic Forum, that they are open to trade oil in other currencies other than the US dollar. Now, Argentina and Brazil are exploring the idea of a common currency called SIR, or SALT. It is aimed to facilitate trade outside of the US dollar. So the BRICS currency is tentatively given the name R5, just coincidentally, is after the Riel, Ruble, Rupee, Renminbi, and Rand. Okay, Rand is the currency of South Africa. So Iran and Russia are exploring a gold-backed token for the oil trade. Bank, Russia just tokenized gold. 2 African nations now actively using gold for transaction, which is Zimbabwe and Ghana. Now, what is the trend then? There will be more political bickering in the US as the debate for the debt ceiling intensifies, and this could create angst in the stock market, which means frustration, worry, concern. So as this drags on, the stock market is going to react negatively, okay? So about the tanks will do little help as their numbers are insignificant, okay? And including Poland, the Balkan states that intend to send tanks to Ukraine. I think they number maybe a few hundred, okay? It's going to be insignificant, okay? And after that, after the tanks are destroyed, then what? So it's, if you watch my global trends, okay, in my YouTube channel, I talk about the amount of money that they have spent, which Ukraine is now becoming a financial black hole, okay, for the Western nations. So more tension within EU as Poland seeks repatriation from Germany for World War II, okay, and eager to play a military leadership role with regards to Ukraine. So more news on the development of R5 and possible R5 plus with the inclusion of Singapore dollar and the UAE dirham. And this is from a source, PP Escobar, who writes a lot about geopolitics. You can actually go to his site called The Cradle to read more about geopolitics if you are interested, okay? So Russia will probably make more announcements on the integration of gold into the country's financial system as Russia seeks to boost its gold mining to 3% of GDP with the intention to become the world's leading producer of gold. Now, the largest gold producer in the world before Russia recently was China, okay? You'll be surprised, okay? So China has been very secretive about its gold project. They have sent a lot of those military engineers as well as geologists to all corners of China, even to the worst, to the far off regions in the deserts to look for gold. And China's gold have never been ever exported. It has been retained in China for as long as they have discovered it. So a lot of people put China's actual goal is much more than what the PBOC said. PBOC said that recently their goal is nearing towards 2,000 tons, but at the Shanghai Gold Exchange itself, the amount of gold that has been withdrawn at the Shanghai Gold Exchange, which is actually a physical gold exchange, not like the comex, okay, which is actually a futures trading market. So the amount of gold that has been withdrawn from the Shanghai Gold Exchange is more than 20,000 tons. That means the citizens, private individuals, private corporations, or other corporations, they are holding on to 20,000 tons of gold, much more than what the US proclaimed that they have at Fort Knox, which is 8,000 tons, okay, where they have never been audited since the 1950s. Okay, so more central banks and sovereign wealth funds will buy gold to hedge against geopolitical uncertainties and recessionary economy. So as I mentioned, Swiss wealth fund have mentioned that they are going to have 1% being allocated to buy gold. Then we have a lot of all these, small little moves that are now gaining traction, okay, where they want to move towards gold. Now, one of the things is that early this morning, I was chatting with Evelyn. We talk about Saudi Arabia starting its own digital currency, okay? Just as they mentioned that they are open to selling oil in other currencies. And last year, the government was considering building several gold refineries. So join the dots. So from how I see it is that probably Saudi Arabia will use the digitized token that is backed by gold to conduct transaction outside of the US dollar. And, you know, its refinery will then be the source of it, okay, because it will import from elsewhere, okay, and then refine it and then set up its own gold exchange probably. And very incidentally, okay, a number of BRICS applicants are actually OPEC countries, okay, and a number of them have already their existing gold exchange. For example, Russia. Russia is not in the OPEC. For example, UAE, okay, for Nigeria, okay, and these countries being part, and now Saudi Arabia wanting to join in, you know, in gold refining. So that goes to tell you that OPEC and BRICS are moving closer together. Okay, Algeria also applied to join BRICS, which is also an OPEC country. So that is why the BRICS new reserve currency will likely be backed by 3 major commodities. There will be others, but I think the 3 major ones will be gold, oil, and gas. Okay, so back to you, Evelyn.
Okay. Yeah. So yes, I think for those that who have joined us for the first time today, or have joined us quite some time, and you are not the member of our monthly global trend forecast, I would strongly encourage you to become the member. And I think we also have quite good response for our book here, thanks to the people, to everyone's support. And we would like to, you know, we would like you all to really explore the year of water rabbit itself. Actually, it's a year full of opportunities, and provided you have the foresight. And here, if you are still not yet the member and interested to become one, do hurry, because actually our promotion will end by this month, 30th or 31st of January, and we will not accept membership anymore until the next year. Okay, and if you have not seen our book before, you can get a free chapter preview of this book. And the benefits of becoming the member is that you will have a foresight to enable you to make better decisions, potentially also enhance your investment portfolio by selecting the right sector to focus on, with so many studies and research done by PC and backed up by the energy trends that I've done in the astrology side. And also the annual 2023 forecast astrology is already over, but we have the recording for the members, and we will only release this 1 month or 1 or 2 months later in the YouTube for the public. Okay, so you will also get this content that currently we are talking here. If you have no time to attend, you will get this content, you know, 2 weeks ahead compared to the public. And the private Telegram group, so far there has been a lot of questions being answered from the members as well, and also a PDF presentation of this PDF file of this presentation as well. So next page, PC.
I also want to add, that in the Telegram group, I've also posted a lot of news that are trending, okay, regarding commodities, regarding central banks, regarding the economy, that I sometimes will not post on my Facebook, okay. So that's the advantage of the Telegram. You get your questions answered, and also additional feed of news that sometimes you know, I will not repeat it again in the monthly talk show. Yeah. So hold on, Evelyn.
Yeah. Okay. Thanks, PC, for adding that in. Yeah, maybe I will just drop, and also, as I said, it will be open until the 1st of January, because this is for 1 year membership, 12 months access, and the total for this introductory, because this is the first time we do this, so it's only 90 ringgit. It's really value for money. I can tell you that even a cup, even Starbucks coffees also cost more than this, and you get good quality informations. Okay, so with this one, so we will put the link in the chat box later on. If you're interested, do support us on this one, on our, on helping yourself to have a better insights into the global trends, which will also, impact the investment landscape that that you could be holding. Okay, and you will have a knowledge on what will happen, the forecast as well, the foresights as well. Okay, so let me just drop the chat, the enrollment details here. Wait. Okay.
So meanwhile, don't forget to visit our YouTube channel, help support our channel by liking and sharing. Yeah.
Yeah. Okay. Yes. And then also, this is the link that I dropped in this one.
So, well, thank you very much, Ivan. Evelyn, you are suddenly muted.
Yeah, what I say is that thanks, Ivan. Yeah, I want to say thanks to Ivan because he's one of the first members who signed up for this. And also,
thank you, Augustine. If you want to buy, Celine has a question. Gold ETF like GLD. I would advise against buying GLD. Now, GLD is not 100% gold-backed ETF. If you go to its prospectus, they will not guarantee that it is 100% backed. So if you want to buy gold ETF, buy the PHYS, okay, under Sprott Physical Gold Trust. Now, theirs is 100 backed by physical gold. So GLD allows short selling, allows options to trade it as a derivative. So the bullion banks actually use GLD, okay, to manipulate the market. And GLD custodian is HSBC, and HSBC is also one of the bullion banks. Okay. Hope this answers your question.
Okay, yeah. So I think maybe move on to the next page, BC.
Yeah.
Yeah, okay. So we have the instruction to get the book for free. Actually, if you enroll in our members, you can, get that ebook for free for offsetting for the membership fees. So next.
Hold on.
Okay, so this is our YouTube channel. I have already dropped the link into our, into the chat box. For those who have not known our, oh yes, thank you very much, Richard. Yes, because PC does his research every day, okay, and he will drop whenever there is a new information.
Yeah.
Next.
For those who are members, you know that I work like every day of the week. Yeah.
Yeah, even Chinese New Year. Yeah, even Chinese New Year. So because PC is really into sharing. what he knows and all these things. Okay, so we also do it because we are passionate about this subject. Okay, I'm passionate about astrology and how it impacts the global trend, and PC is really passionate about the global trends itself, which will, which should tell us that where are we heading in the future. And having a knowledge is very important now, because everything information cannot be trusted these days. Okay, so I hope that you guys will support us in our future upcoming works as well. I'm both PC and I have some more, upcoming projects.
Yeah.
Yeah, thank you very
much.
Thank
you, Celine. Yeah. And thank you, Richard.
Yeah. Okay. Okay, so I think maybe, Augustine, yeah. Oh, February forecast.
I think it's going to be a bit of positive and negative. Now, why do I say that? One thing to watch out for will be the CPI, okay? In the month of February, they will release the CPI. Now, if the CPI shows further disinflation, which means falling inflation, the stock market would rally. But right now, the market is also in a bit of concern about how long the debt limit will drag on. So that is why, I think there's there's going to be some up and down. So instead of what happened in January, where, for sure it's going to indicate that it's going to rise. Okay. In February, the US stock market would be something good, it will rise, but something bad, okay, it will actually fall down as well. So during this period, I think, if you want to invest for long term, okay, I would suggest that the commodity market is one that is the most undervalued. Okay, you can look into uranium because the world is starved of energy. Oil and gas sector, be prepared for those volatility. I think for tech, it's just the, a lot of the tech stocks are not going to do well in the US. But if let's say you have the holding power, then I think the Chinese tech stocks would do well. Okay, if you are able to have a longer term view, because China now is going to be very aggressively pursuing their technology. Just now I mentioned that Shanghai is going to, China is going to increase its robot density. Okay, these are very, very good things that support the tech industry. Okay.
Okay, yeah, to answer Augustine's question from the astrology point, because January chart is the signal is clearer, so I can see that it will goes up. Okay, unfortunately the February one is a mix. Okay, because of all the elements are mixed that are supposed to impact the stock market. So this one, unfortunately, I cannot be very spot on this kind of situation. So there are some months that I can be quite spot on, but sometimes when the signal are a bit mixed, so it's like a noise over signal from the engineering standpoint, so I cannot really predict it very well. But I think it's also mixed signals means mixed market, as PC Wong says. Okay.
Sorry, how do you see the hexagram? So you watch it accomplish. Normally I see like not so good, right, for accomplished hexagram.
Okay, it's actually accomplished hexagram is definitely not a good hexagram. I already say it looks good, okay, but it means that thing has already accomplished. But unfortunately, because when you goes back to the cycle again, then it will not be accomplished, because in the world we are always in a cycle. The planets also rotate in a cycle. This is how I interpret the whole thing.
I would also like to add that when you want to talk about the hexagram that being accomplished doesn't look like accomplished, this is precisely what we are going to see in inflation. Wall Street is already celebrating. Biden admin says that we are going to cut, inflation is going down some more. Yes, it might go down some more, but all this is based on the premise that the US is using the SPR to keep on pushing oil into the market to depress the price of energy. Now, in all things economics, energy is the center of all economic activities. Therefore, the priority for the Biden admin was to push the price of energy down so that it's reflected as lower inflation. But right now they are sensing, like they have accomplished something, but they haven't come into the impact that they need to refill at some point in time, and that China reopening will spur up the consumption of energy, okay? And the potential for Russia to cut oil production just to spite the Western nations, okay? So this has not been built in. So it's like right now, there is some sense of accomplishment, but the next round, okay, when energy costs rise up, where the SPR doesn't have much more to release into the market because its stock has already been depleted so much, then we will have a major cycle of inflation. There's a 3 cycle of inflation. Right now, we are just at the first cycle. If we were to compare similarly to what happened during a similar period of high inflation in the 1970s. Okay, hope that's answered your question.
Yeah, okay. So even, the prediction, the forecast, I say that it's not like, we will need to take even what we say or the forecast of the astrology also with a pinch of salt. Okay, so I hope every members will understand this. We are also not God. We really not predict every time is correct. Okay, so yeah.
Bing Hui has a question. How about Singapore and Hong Kong REITs performance in 2023? Now, I think Hong Kong REITs will be better, okay, in because of China reopening. Hong Kong has some retail REIT as well as those office REITs. Okay, I think Hong Kong REITs will actually start to rebound because Hong Kong also have been a center for REITs in China. And not only that, I think with China reopening, the most undervalued stocks would be the infrastructure stocks, okay, especially those toll and so forth. Okay, those are actually undervalued. And if you don't mind holding to watch how it unfolds, I think likelihood, okay, I'm just sharing, okay, not offering financial advice, okay, because I'm not a financial advisor. You have to do your own due diligence, okay. But with China reopening, there will be tolls that will be earned, and I think they are right now being pretty undervalued. So those stocks are almost like REITs because they pay a very high dividend, okay. And where Singapore is concerned, I think Singapore REITs are right now, I think they have been down for quite some time, okay, because of COVID and all those things. And you also can write on some Singapore REITs, okay, I'm not going to name them, you have to do some due diligence, yeah. Some Singapore REITs actually do have businesses in China, okay, and those are actually, China is reopening. So these REITs, okay, especially those that are related to retail should do well as well. Okay, now the other thing I believe that the Singapore is a very high-tech area center, and those in the warehousing, okay, to support the logistics would do well, and as well as those REITs that function as data centers, okay, because data centers and warehousing actually have very low cost, okay, low maintenance cost, because they don't need to beautify, do renovation, do decoration and all those. So their cost of operating are actually much lower. That's why I think data centers and warehousing would actually be better than those that are in the retail business in Singapore. I qualify here saying Singapore, but those with retail operation in China is different, because if you look at the way that China malls are actually developing, yeah, it is now becoming a major lifestyle center. It's not just shopping, okay? So they have a lot of activities, Okay, they have a major swimming pool,
the F&B
F&B and all those. So China's malls are more lifestyle. Okay, and Singapore, if you look at the Singapore retail business, a lot of malls, a lot of those departmental stores and all those have actually exited from Singapore for, after being there for 10, 20, 30, 50 years. Okay, like I think Robinson was the last one to go after so many years. So that's why the retail REIT that specifically active in Singapore, I don't think those would do well. Okay, but for those that are in data center and warehousing, I think those could do well because that's very lesser maintenance cost.
Yes, that's right. Okay. Even for data center, I think our data also keeps growing. That's why there's really huge demand, for data center as well.
Yeah.
Yeah. Okay. So I think I hope those that were not our member who has joined us today, I really welcome them to join us as a member to expand our family. Okay. Yeah. So I think next one we'll go to the summary.
Okay.
Okay, we will answer that question later, Ping. Okay, so yeah, I would say that the wood fire would be the headline for the next one in the coming months. So in this time or in this year, everyone tends to be impatient, and so does the market also. So do navigate the market carefully. Okay, so and also price will grow over time, and with the inflation, with the supplies, the demand over, and the demand expands more than the supply. So, and definitely the price will go up for no reason. If you are in business, you can also try to create scarcity in your product. And you can, create that demand that people will buy. So this is one clue for y'all who are in business. One tips. Okay. So I think I'm busy over to you to do the summary.
I think the debt ceiling battle could turn ugly and put the market on edge. More disunity in the Europe. Okay. China will continue to expand economic activities. Oil price would gain. And concerns on inflation as central banks start to worry about the economy and not inflation. So the moment that the central banks start pumping money to fight inflation, then the people will be worried of inflation again. So there'll be more development on R5 and R5 plus. So let's see where it goes. Yeah.
Maybe our ringgit will be in. Our ringgit also starts with R.
Yeah.
Okay. Yeah.
Okay.
So I think Bingwu has a question. What do you think of solar business in US?
I think the US is actually going to subsidize a lot of solar, a lot of renewable energies. Okay, but between solar, I think, and nuclear, I think a better choice would be nuclear. One of the key things why I think the solar business in US is that US is not a major producer of solar panels. The major producer of solar panels is actually in China. So what happened is that, well, the US is not going to import from China, so they have to do their own. But because they are doing their own and they don't have the large market in China, China is not going to buy from them because they are the largest producer itself. So that's why the cost of setting up solar farms in US would be much higher. Okay, if you want to invest in solar, then I think it's better that you go into China because their renewable energy is growing. Okay, not in the single percentage, but in the strong double-digit percentage. I think about 20 to 30% annually. Okay, so also the US development of renewable energy a lot of it would depend on funding from the government, and right now they are already at a debt ceiling. Okay, so this is another thing, which going to put a lot of the semiconductor manufacturers who shifted from everywhere else in the world to the US because the US have a 52 billion funding, okay, to to pay for the factories, to subsidize the factory construction and all those. Right now, they could also be very worried because of the debt ceiling. So what if they already spent so many billions, but then the money from the US is not forthcoming? Okay, so then that is going to weigh on their balance sheet. So that is why I think this debt ceiling is going to put a pressure on a lot of business communities in the US. Okay, but once they raise the debt ceiling, then we have another problem. That's going to be even greater inflation. So if you want to invest in solar business, I think China would be a better place to go in. You know, in our member area, I think recently, Richard asked me about a particular company. I actually told him what company it was. Yeah.
Yeah. Okay. So I think we will need to, any other questions from the members?
So if there's no other questions, shall we call it a day then?
Yeah.
Okay.
Okay, so I think that's it for today. Today we have a lot of attendance. Thanks for those that calling in to attend this session. Appreciate that.
Yeah, and I also appreciate the interactivity that the members shared in the Telegram chat, because we are just learning from each other, and hope to see you all in our next talk show. Thank you, everyone, and have a very enjoyable week ahead.
Yeah, okay.
Bye-bye.
Yeah, thank you. Happy New Year. Okay, bye-bye.
Bye-bye.